Stock screeners are great tools to help you narrow down kind of the stocks that interest you for looking at a deeper dive, where you can kind of search by different criteria, especially around like fundamental analysis. And there's a lot of different ones out there. You've got Yahoo Finance, which is a good basic one, investing.com, which is good for a lot of international stocks, FinViz, which is a little more USA based, but a lot of detail. TradingView is good for all things technical analysis or charting. So, check those out. You want to use a screener that's, using your currency and all that. So just put in like stock screener and then your country name, India, Turkey, whatever, to find a stock screener that's in your currency, like rupees for India, for example. But let's look at just use a practice one here, and we'll take a look at a real common one, Yahoo Finance. Your online broker might have a stock screener too, probably does. But how we can kind of use these stock screeners, to look up stocks. So we're going to look at Yahoo Finance in this demo and show you how to put these together and how you can do this on your own then. Okay, I'm over at finance at yahoo.com. Sometimes it'll look a little different depending on what market you're in, but you can type in your ticker symbol right here. But we're going to go to screeners here. And if you just click on the main thing where it's the screeners, not without going into these parts, but if you have it set up like this in your country, you click on screeners. It'll actually come up, if you scroll down, with some Yahoo Finance screeners, some pre-built screeners, like most shorted stocks or undervalued growth stocks, growth technology stocks. So you can kind of get something that's already pre-built for you. If you see something that might be interesting to you, you can take a look at that. But otherwise, we go back up here to screeners. And you can see where we've got, and it's listed here now in this ribbon, but we've got equity, which is where our stock screeners are. Whoops, sorry. That's where we're going to go as these stock screeners, but they have mutual fund screeners, exchange traded fund screeners, futures and index screeners. But we're going to be looking at stock or equity screeners. It means the same thing. Stock and equity would be the same. So I'm just going to click on that. And then you can build your stock screener with the different filters below. Now, it defaults to some things. So since I'm based out of the United States, it defaults to the United States. But if I click on this plus sign here, I can choose all sorts of different countries here, from India or Iceland or whomever I want to have. I could just choose all those. And then on the right-hand side, it'll start showing how many estimated results. So by choosing these regions, I'm down to 22,560 possible stocks. So that seems to be a bit much. So for our demonstration, let's take out these two. We'll just leave it at United States just for demonstration. Again, use what works for you. And then you can choose, like, let's say market cap. You can just leave this all blank so it's all of them. But let's say I'm looking at dividend stocks. I want to look at big companies that pay a dividend. So I'd be looking at large cap and mega cap, right? So now I'm done on 1,966, so we got to refine this more. But right now we're at United States, big companies. I could put in a price if I want. I could put in a sector or industry here. Let's say I'm interested in big companies in the healthcare industry. So I would choose healthcare versus utilities or technology or whatever. So I'm going to choose healthcare. And there we go. We got healthcare in there. And now there's 176 large cap, mega cap healthcare companies. Let's click on mid cap. You can see how that number goes up to 395. Let's take that out though. So you can see as you keep refining, your estimated results, how many total companies you're going to look at will change. If I want to make that go down even further, I could click on, add an industry, and within the healthcare sector, I could choose like biotechnology or drug manufacturers or medical devices or distribution, medical devices right over here, different things I could choose. So I'm just going to leave it, open, here. So it could be anything for now. Again, I could always go back and refine that. So now I want to look, but what I'm looking for is like dividend stocks, right? So let's say I want to use two numbers. Let's say I want to use our PEG ratio, price kind of relative to earnings, and then also a dividend number. So I'm going to click on add another filter, and then it'll come up with all these different filters. You can kind of scroll through here and play with this yourself to see all these different things here. We've got like debt ratios, profitability ratios, liquidity ratios, like the current ratio, current assets, current liabilities, earnings per share, balance sheet, cash flow. ESG is environment, social, and governance. So if you're looking for ESG type stocks and a rating around that, that's a newer type thing you can look at. So let's say we're looking at, we want to look at like price to earnings and really that price to earnings growth valuation number here. So we're looking at a valuation metric. There's our standard price to earnings. You can choose that one. But let's say we want to look for a price to earnings with the growth factor, right? And we'll talk through that a little bit more. recall that lesson, we're looking for something under 1.0 and a PEG ratio or PEG or price earnings growth, which is great. So we can put that factor in, but right now we're just choosing it. And then if we look at profitability and dividends, we got dividends here. So let's say we're looking at a dividend yield, forward dividend yield. So we want to put a parameter around forward dividend yield. So we've got, let me close this, and we've put those two things. So we're looking at right now is United States companies, big, large, or mega cap in healthcare, with a factor around price earnings growth and our dividend yield. And let's say we're looking for really attractive in terms of a price, right? So anything under 1.0 is fantastic for a PEG ratio, but let's go up to 1 to 2 as well, just to capture more possible opportunities here. And then let's say we want something that pays a dividend, and we want that dividend to be greater than, bigger for the yield number is better, right? But we could choose less than or equal or whatever, but we want to choose something that's greater than. And let's say we're going to be reasonable. Let's say we want it to be greater than 3.2, all right? So let's say 3.2, right? We're down to 10 stocks here. So then if we click Find Stocks, it will give me a list at the bottom of different stocks, right? And we can see some big name companies like Merck here and Bristol Myers. And because it's pulling in things that might be listed on the United States Stock Exchange, I believe this is a Chinese company here, Takeda. It's listed on the New York Stock Exchange, I believe. So, it'll pull in like maybe companies that are on the stock exchange, but maybe not U.S. based. Whereas, let's say like Cardinal Health, for example, is definitely U.S. based. So let's say I like this, Merck or Bristol Myers. I can start looking at some of the numbers here, kind of a quick numbers with their different PA ratios or where they're at the 52 weeks. But if I just click on them, let's say I click on Merck here, well-known company, I can start to see, a quote for Merck. They're at 3.49 in their dividend, a little high in the PE ratio, and then I can start really diving into them, right, and really get a feel for them. Let's say let's go under statistics and look at that PEG ratio. So if I go under statistics, I'm going quick here because this is just for stock screen to see how that works. Now we've gone beyond stock screen. Now we're looking in more detail. But you see our PEG ratio is reasonable at 1.29, and let's go down to that dividend number. That's at 3.49, and the payout ratio, 78%, is a little bit on the high end of that payout of income, but it's not over 100%. And Merck certainly generates. We look at operating and leveraged cash flow here. They generate a lot of cash over the year, 13 billion in operating cash flow, and they got 10 billion in cash just on their balance sheets, sitting around. Sure, they're carrying a lot of debt, but they've got a nice current ratio above 1.3. So that's a good positive sign too. So Merck, is your steady kind of big company that pays a dividend. And so that's what our screener kind of came back to that we were looking for. So use the stock screener in terms of putting in your own criteria that you want to do, and you can add in all these different things, and different screeners will just have different places where you add filters or different things, and then make it your own as far as what you're looking for. Okay, let's do another stock screen with a different site. I'm at investing.com, and let's do something that's outside the United States, a little bit more international. At least for me, it would be international. Maybe where you live, it would be local. So with investing.com, they're good again with a variety of different markets, which is really nice. So I'm going to go under markets. I'm going to go under stocks, and we're going to go right here to stock screener. Is where you can find it. So I'm going to go click on stock screener here, and then I'll bring up this stock screener. And as you can see, for me, it defaults to the United States. Depending where you live, it might default to where you live. But I can easily just click this down arrow and choose any of these different countries here. And as you can see, there's a lot of different countries you could choose from as far as looking at different stocks in different markets. Let's say I'm looking for some growth stocks, and I'm looking for maybe growth stocks, maybe a little bit more emerging markets. So let's say I'm looking at, China, for example. So let's say I'm interested in China. And you can see it's coming up with 4,726 results so far with China. So that's a lot of stocks to choose from. And then I can choose different stock exchanges in China. Different stock exchanges in there, or I could choose all exchanges. Like in the United States, you'd have like the NASDAQ and the New York Stock Exchange. Here you can either choose all or some of the exchanges. I could limit my number of sectors or the type of sectors I'm interested in. And this is nice, where it kind of gives you an idea how many companies are within these different sectors, like consumer discretionary. There's a lot of companies in there. Probably in information technology, there's a lot of in materials. There's a lot of companies in there too as well. So you can find different things. So let's say I'm interested in let's leave it at all sectors, and we'll just put in some growth type numbers in there. Or I'll tell you what, let's go ahead and look at technology. What do we got here for information technology? So let's say we're looking for information technology Chinese companies. You can start seeing them being listed here, right? And I could pick a particular industry within that information technology. One thing that Yahoo is a little better where it would narrow it down to actually what's in that sector. This doesn't. So, I mean, beverages, there's no information technology beverages. You'd have to go down and find things like software or whatever it might be. So we're just going to leave that as it is. Equity types, there's all sorts of things like real estate, investment trusts. Again, that doesn't really match up with information technology, but we'll leave it as all equity types. All right, so here you add criteria from the side. So let's say we've got popular ones, certain ratios, certain prices, fundamentals, dividends, different things. They actually have some technical indicators, which is nice too. So let's say we're going to use some of the popular ones. So let's say we want to look at price to earnings. We can choose here, and then we can adjust it on the side here, right? So let's say we look at price to earnings, and we want to look at market cap. So we can adjust whether we want big or small caps. We'll play with these sliding scales in a moment here. But let's say in ratios, let's say we're looking for a growth company, and we want to look at something like price to sales. Like here's the trailing 12 months price to sales. Maybe we're looking for a company who's got good sales, good price relative to its sales. Maybe some of these companies don't even have earnings yet. A lot of times, newer emerging growth companies, don't have earnings. They're still trying to be profitable, but they'll have sales numbers. So there we've got 3 criteria in here, and we're down to 623 matches. But let's say we want to, narrow that range down more. So we can just use we can either just type a number in here, or we can use the slider thing right here. So we're going to slide. And let's say we're looking for companies, well, 42 is fairly high. Let's get that down a little further. Let's say we're looking for a growth company, still pretty high. Let's say it's under 20.85. In fact, let's make it 18. And we can just type that number in, click anywhere, and that'll bring it to 18. Now we're down to 24. And let's say we're looking at a little bit larger cap stocks. And that brings us down to 15, right? I just used the slider to make these a little bigger market cap. And let's say price to sales. Let's say I'm not looking for something in the crazy high end. We want price to sales to be a lower number in terms of a value. Let's bring it down to 12.87. So we still got 15. That's okay. We can investigate 15, but let's bring it down a little further. See if we can bring that number down a little further. And now we're down to 11. So price to sales 6.4. Again, lower is better. If I got all the way down to 3.76, I've got 11 companies still, so that's still pretty good there. So let's leave it there. I'll move it back up to about 6. We got still got that 11, and so this now has reduced this down further to companies that are technology companies in China that we can investigate a little bit further. And you can see it's got it sorted by market cap. So here's some big guys. Oh well, Foxconn. I know Foxconn. So Foxconn's a big company. Look at their volume as far as their trading volume, 25 million versus, let's say, 307 million. I wonder if I'm reading that wrong, because these are, I guess, this is stacked ranked by market cap, not volume. So this is a big volume company, but lower market cap, at least as far as, its trading. And you can see the different, Sichuan or Shanghai, things. So from here, you can start, going, narrowing it down. They also have where you can click on these quick bars where you can start to see some of their fundamentals, like whether they pay a dividend, like Foxconn pays a little bit dividend. This should be their dividend yield. I'll hover over it, see where it says dividend yield. So you can find actually some stocks that might pay you a dividend too. Also, this had some technical numbers, looking at some odd type of technical numbers, probably looking at their charts, and just kind of aggregating that. I'm going to show you a little bit better one for technical performance, so you can see how they're doing. Like you can see a lot of these companies are up, way up over the last 3 years, but you can see like Foxconn is down, and they're all really down at this point for what's going on with China. Some things around, government involvement and government regulation is drawing down all the China stocks. Except for this one here, at least for the last year or so, but over the 3 years, it's down 50%. So you would just click into them to learn even more about them. These are just different patterns that might be showing up. This is back to chart patterns like a dragonfly and different things. So you can really dive in deep on this. So it gives you a little bit more, not only for different countries, but also a little bit more on the technical side. And again, right from here, you could go into, let's say if we want to go into Foxconn or Foxconn and find out more about them, see their chart, see some different things, get a little ad here, more chart stuff, and just see some different information around them. You know, their beta, 1.8 price earnings, different things we put in. You can see their income statement, different stuff that you can get in there. So this is a quick look as far as using investing.com as far as something that might be a good stock screener, you know, looking at different markets. And really the key to look at different markets is right when you start here is choosing the market that you're interested in looking at. Okay, let's do a deep dive into a stock using all the different things that we've learned. And I happen to just pick out Medtronic here, which is a medical device manufacturer. They make things like stents and pacemakers and a whole bunch of different types of medical devices. So let's just use them as an example to look at some of the stuff that we've learned. So Medtronic, if we look at it from a SWOT analysis, strengths, weaknesses, opportunities, and threats, you know, Medtronic, if you're not as familiar with them, they're very much a leader in the medical devices field. They do have competitors and some strong competitors, but they have a very large product line and across a lot of different types of therapies and things that they do, and they're very much a leader in medical devices. One of their weaknesses, and I'm just taking out some of the highlights here, there's a lot more strengths and weaknesses just to highlight for educational purposes, you know, is they're a little bit more dependent on U.S. market dependence. You know, so growing globally could be a great opportunity for them. In fact, that's why I put it in the opportunity area, is growing even more globally. They are global, but they could even, you know, grow even more. So they could really grow their product line even more globally. And then threats for particularly any type of healthcare, you know, manufacturer or pharmaceutical company, you know, government regulation is always a threat, always something to be aware of. You know, that you're meeting the government standards, there's lawsuits, there's a lot of lawyers that work for these different types of medical device or healthcare firms. So government regulation is always in the mix as far as something to be aware of. In addition to things like competitors are always usually falling under threats too. If we look at that kind of that competitive landscape and look at the Porter 5 forces, before we get into ratios and the technical analysis, and let's look at this from the Porter 5 forces for Medtronic. If you look at the bargaining power of buyers, you know, it's pretty low, right? I mean, if you're a buyer, you're buying like a pacemaker or a stent, you need that device to live, right? So you don't have a lot of bargaining power. It's like, hey, could you give me a deal on this pacemaker so I don't die? So they don't have as much bargaining power. They might have choices, again, a lot of competitors, but you know, they don't have a lot of bargaining power. They just can't say no. Threat of new entrants, I would say that's low because it's a real high cost area to enter. It's not like you're just going to make a website and sell some stuff for e-commerce. You know, it's really, you know, very scientific, very expensive to do research and development, to develop products and things in the medical device sphere. So you need a lot of money to do that. So I would say low as far as it has a very high cost to enter for new entrants. The bargaining power of suppliers, I rated that a medium. You know, Medtronic or MDT is big, but there are other big clients that these big suppliers for, you know, components and different things have. So it's not like it's a company where it's real dominant and like if you don't do business with this company, you're out of business. There are competitors. And so the bargaining power supplier is kind of a medium. If I think of substitutes, could you use something other than a pacemaker, for example? Well, there's alternate treatments. There might be some pharmaceutical treatments, but it's generally the threat of substitutes is low. You know, if people need a certain medical device, they really need it. They may not buy it from Medtronic, but if they need a pacemaker, they really need it. And then competitive rivalry is actually very high. They have some really strong competitors, big name companies like Johnson & Johnson, St. Jude Medical, Boston Scientific. These are all big companies with a lot of money who are very successful in the medical device field as well. So Medtronic has a lot of different competitive rivalry. It's not like it's a one-to-one thing where you have like Coke and Pepsi going head-to-head. Medtronic has to compete with a lot of innovative and strong companies. And so that's why I rated that high in terms of their competition. Let's take a look now at some of the numbers and how are they doing recently as we look at some of that fundamental analysis and we look at technical analysis. So I'm at just Yahoo Finance at yahoo.com. I put Medtronic in here, and let's take a look at them. There's ticker symbols MDT, about 103 right now at the recording of this video. If you look at their 52-week range, they're more towards the bottom of their range, so 98 to 135 in terms of their range of prices over the last year. So near the bottom, maybe a good opportunity there. Not a super risky stock, a low beta. High price to earnings ratio, actually 29.75. So you're not getting a deal on it, even though it's down towards the lower part of its price to earnings range. You know, the average is right around 16, maybe a little higher for medical devices, but not 29. Solid earnings per share. They do pay a dividend, a little dividend, 2.4%. We'll take a look to see what's their payout ratio in terms of their dividend. And then we'll look at their chart too for the technical analysis. But that's just a quick summary. If we go under statistics, we can see some of the various statistical numbers. Looking at the forward price to earnings ratio, looks like that's going to come down. So the earnings are probably going up as the anticipation, and their price will either remain the same, maybe going down a little bit. PEG ratio, we'd like that to be under 1.0 ideally. So it's a little bit higher at 1.79, but lower than it's been over the last previous quarter. So maybe there's an opportunity there. Price of sales, kind of the same thing. Under 1.0 would be awesome. In the 1 to 3 range might be okay. High tech stocks might run a little bit higher. This one runs higher, about 4.44. Same with price to book. Would like that to be around 1, maybe the 3.0 or below. This is 2.69. It's come down in price, so there might be some opportunity there as well. Just at some of the other highlights, with any stock, you could really dive in even deeper. You can see over their last 52 weeks or 1 year, they're down 6.5% compared to the broader S&P 500 market of 17% at the time of this recording. Real strong profit margins and operating margins. Their return on assets and their return on equity are not stellar. They have a good management team, but they haven't really shown it in terms of the numerical numbers there. They generate lots of revenue, $31 billion over the last TTM or trailing 12 months. $31 billion in sales or revenue, so a real large revenue per share. In fact, if we look at their balance sheet, they've got $10.6 billion in cash just sitting on the balance sheet. They're carrying a lot of debt, $25 billion, so that's something to be aware of too. But in terms of their in a high debt to equity ratio, but if we look at their current, very high debt to equity ratio actually, but if we look at their current ratio, current assets, current liabilities, that's another number where we'd like that to be above 1.0, that our current assets are bigger than our current liabilities. They're at 2.91, so they're really good shape in terms of their current ratio. So that's a good sign. And you can see from their cash flow, they generate a lot of cash, over the last year, operating cash or leverage free cash flow in the $7 to $5 billion range. And they do pay a dividend. So if we're looking at the dividends here, we've got that forward-looking dividend of 2.42%. We want to look at that payout ratio, make sure it's not too high. And it's pretty solid. It's at 69%. We'd like that to be a little bit lower, but it's not like it's 100% or even higher where they're paying out more than they're bringing in terms of net income and having to borrow money or do some different things to try to raise cash. They're paying out a lot into their dividend from their net income. Sometimes with medical devices, that could be a little concerning because I'd like to see more of that money go into things like research and development, for example. If we scroll back up, you can always take a quick peek at their financials here. That's where we've got their income statement, balance sheet, and cash flow. It defaults to the annual basis, so you can kind of see their total revenue is pretty steady. Nothing super growing over the last 4 or 5 years. Pretty steady in terms of revenue and their cost revenue and their gross profit. Pretty steady. If we look at a quarterly number, we see the same thing. They're just very predictable in terms of sales and revenue and gross profit. All seems very, very solid, very predictable. Same with their operating expenses. All the top level numbers seem very solid and nothing too surprising there. Balance sheet, we should see. Let's go quarterly on the balance sheet. Same thing. Their assets are pretty steady. Their liabilities are pretty steady. Let's go under like current assets, for example. The receivables are pretty steady there. I mean, in cash position. Inventory, so they're not carrying a lot of inventory more than any other type of period. So a very steady, predictable basis, which is your business. So if you're looking for like a predictable dividend or predictable grower, these are good signs in terms of that. I mean, certainly there's a lot more things you could go into the detail, and maybe that total debt might be a little concerning. But even that total debt they brought down from 30 billion, down to 25 billion. Remember the numbers are in thousands, so this would be in billions. So that seems pretty reasonable. Let's look at their ending cash position here with that. So if we look at ending cash position, we'll go quarterly again here. And we've got the three big buckets: operating, investing, and financing. So you can see over the last 12 months how they're doing there. And if we look at just quickly, just looking at their ending cash position to keep this lesson a little shorter, feel free to dig in deeper on these different things. Go into these different things to look at more detail, in stuff that might be, what they're doing in there. That would be something you'd want to do, of course. But if we look at their ending cash position, back in October here, they're looking at 6.4 billion in ending cash, but this is a little bit concerning. Now they're 2.8. So, what's going on here, might be something to look at. What might be really jumping out here? Right here, you see where this is, financing cash flow, a negative 5.1. Let's see what's going on here. Their beginning cash position and the change in cash. I clicked the wrong thing, excuse me. I'm going to go under financing here. See that 5.19 or 5.129? Let's investigate that a little bit further. And net issuance of payments, that's really where the bulk of that's happening. You can see like cash dividends paid is pretty solid. This is being paid out of cash, being paid out of net income. Buying back some stock, so that's taking cash out because they're buying net common stock positions. That's a good sign that they're buying back some stock. They issued some stock too, but it balances out over the last 12 months to be kind of a good thing that they're doing stock buybacks. Well, what's this negative 3769? Let's look a little closer at that. And if we look at it, we can see short-term debt payments. So they had a lot of short-term debt come through in this particular quarter, which has then gone into the trailing 12 months. So we know their current ratio is very, very good, but over this period up into this current ratio, they had to make a big 2.85 billion in short-term debt payments, right? So when you're carrying a lot of long-term debt, eventually it becomes short-term debt and you got to pay it, or you need to refinance it. So this is where things like this can pop up and affect their cash position. So that's something you could always dive into deeper to see if more of that is coming up if you're concerned about it. So that's kind of like a quick looking at some of their fundamental numbers and their financial statements. Let's go back to summary and let's apply a little bit of technical analysis or charting. Let's say if you're considering buying them, you can look at their chart. This is a daily chart, you can see, which doesn't really mean much unless you're a day trader or whatever. But I want to go to full screen and let's look at a longer term chart here for them. Full screen is what I'd recommend because then you can do a lot more stuff with different intervals and different things that you can do. If we look at this is Yahoo Finance. I would recommend like TradingView is really good. For the technical analysis, the charting folks out there, I have a whole course, 12.5 hours, just on charts and technical analysis, and we use a lot of TradingView in that. But you can choose these different date ranges, or you can use the plus minuses here in Yahoo Finance to raise or extend out the different time frames. See, I'm just using my mouse roller thing so I can go back in time. Or you could just choose something like year to date or 1 year numbers or 2 years or 5 years or whatever. You can just click those buttons too. For me, I find it just easier just to scroll the mouse back. So we'll go to 6 months here and then we'll scroll the mouse. You can change your interval from a daily interval to a monthly interval. If you want, or if you're a day trader, you could go down to like an hourly interval or by minutes. All these things you can change. Let's leave it at day. We're using candlesticks, so we know, like here these greens are closing higher, reds are closing lower. We could change that from a candlestick to like a line chart if you want, or different types of ways that you could do that. It's a bar charts, more traditional bar charts, but let's go back to candle. That's a little bit better. Hollow candle just is hollowed out of that. That's all it really is. So let's go back to candle. So if we look at this now, so let's take a look at what's going on here. So if we go back in time, we can see, let's go back a little bit further. And I'm going to draw some lines on here. So you can see back here, there's this deep, 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 deep drop, right? Right back here, this deep drop. What was happening here? Well, COVID-19 was happening back here, so that's a big part where everybody's dropping, but this really dropped. But if I was to draw a line from the bottom here and kind of go up, through, touching some of these lines, maybe I could be more realistic. Maybe I could even go like this a little bit. You can see how we went down, and then this was kind of like a little resistance area where it stayed above this line, touched it a couple more times here, but then broke through. Remember, if we're breaking through a trend line, if this is an upward trend, and we broke through it to the bottom side, that means that's a sell signal that, could continue that way. Of course, nothing is perfect, but that's the idea of something breaking through a trend line where I'm connecting kind of those bottom parts here. Let me clear that off. And then, as you can see, well, now we've got, I'm going to draw a trend line here. Now we've got a downtrend going on, right? So I'm connecting these tops here where it's topping out because we're on a downtrend in more recent time. And you can see from this peak how we've hit these downward trends here. In fact, Yahoo Finance does a nice thing where it shows that we've got 106 different days or bars, and it's down 21.75%. So it's gone down, it tried to break through but went back, tried to break through a whole bunch of times right in this period, like 4 or 5 times, but never broke through and then went down. Then it tried to come back up again and then dropped down, and then we see another touch here and down. So that's one thing that we're seeing here as far as we're in a downward trend. The other thing that's interesting here, I'm going to zoom in a little bit, and this is this downward trend. I didn't change anything, it's just showing the overarching downward trend, is we have what's called a gap down. I'm going to zoom in here a little bit more. See this big thing? This is like one day's price, and this is the next day's price. Just dropped, precipitously right at the opening, right? So we went from like 111 to 104. So something happened. Maybe there's a bad earnings announcement or something. So this is a gap down. And there's a lot of volume. This is what these bottom things are showing, how much trading volume there is. And you can see this is kind of like its normal trading volume, these red and green bars along the bottom. But you see these here where they spike up, that means there's a lot of negative trading volume. So people are trying to get out of Medtronic stock for some reason, something you would want to investigate. So this price went way down here, right? So let me clear these drawings off. So now we're kind of in this new kind of mode here, right here, where we had like a little bit of an uptrend. If we look at the bottom here, we had an uptrend going this part, how it kind of, touched and went back up in an uptrend, but then it broke through again, right? So it broke through this trend line, and now we're in this, you could really say, if we clear this off, we could be back in another downward trend, right? Here's some touches here that from this peak, that we're seeing some more downward trends. You could say we have like a little mini uptrend here, or it's really kind of more flat right in here, or trading within a small range. I wouldn't say that's a trend yet. So we have this big downtrend, a gap down, a little bit of trend up, and now we're trending back down again, might be the way to look at this, that they're trending back down. So this is the last time period right here, and if I'm using this day interval is what I'm doing, I'd be watching to see if this broke through this trend line to the upside, because if it broke through, that might be a buying signal, especially if it's a company with a lot of volume, which right now it isn't. Let's add another indicator on here too. Let's add a moving average on here. And, it's a 50-day moving average. Let's make that a little tighter. Let's say it's a 14-day moving average. I'm just going to change the color to more of a gold color so it stands out a little bit. But you can change this to 30-day, whatever you want it to be, right? So I'm going to save that. And as we can see, when our moving average, when it broke through here, this is a downward trend. But after we broke through up here, this was where that uptrend came in. So we'd be looking for it to be more of a buy type signal. I'm going to zoom real in here far now. We'd want to break through this trend line, but we'd want to break through this moving average line as well. Would be a kind of a double, kind of like this would be the indicator. Might be, oh, we broke through this trend line, so maybe we're on a new upward trend, because this was our downward trend line, so that's a positive thing for the upside. But if we broke through also this moving average, this 14-day moving average, that if you're going through to the upside, that is also very much an indicator that's a buy type indicator. So if we're trading right now on Medtronic, maybe if we're looking at more from a technical analysis standpoint, I would say like, okay, we're going to watch this. I'm not ready to make a move yet. Nothing's proven yet. I need it to play out. I can't guess at it. I need it to play out. But if it played out where it broke through this trend line and broke through to the upside of this moving average, then we might be having a new upward trend coming. That's where, if we look at, where we think, well, maybe this will be an upward trend. I'm going to zoom in here. You can see we only have one touch here. That's not enough verification. But if it keeps going and we break through these two lines, the downward trend line and the moving average, and we start bouncing off this new potential trend line, upward trend, then in here we might have a buy signal, maybe put a stop loss right below it. All right, so that's some ways to look at it from a longer term chart view. Again, if I was a day trader, I would want to change that interval to, let's say, maybe 30 minutes or even less. And you can see how the chart overall looks the same, but you can see within those tiny intervals, like here, this tiny interval, there's a lot of volume for that tiny interval, right? So here we have a significant downtrend on this tighter chart. So it's really just adjusting your time frames depending what type of trader you are. A day trader, you're going to be at tighter time frames than if you're more of what would be called like a swing trader, or somebody who's looking at these longer like day type time frames. Again, if we look at that, we're still looking at this kind of this downward trend here, kind of connecting these different things. Actually, it could even be up here. So this is kind of interesting here, where it sort of broke through, but didn't, that could be a false signal, right? But otherwise, we got a lot of touches on this without continuing that breakthrough. So this is where we want to watch for that continued breakthrough. Okay, so a lot to consider, but there's some indicators and some good things. So Medtronic, we think about it, a lot of good things for the company, particularly if you want to hold for a long time, get that dividend. It might be a good opportunity in terms of timing your buying, if you're looking at it from a charting or technical analysis standpoint, to be looking at that as well. So there's an idea of how you can use some of these different tools that we've been learning, and now look at stocks that interest you and kind of do the same thing, and really use a dispassionate eye. Don't get emotional or attached to it, and just look at it using these things, whether it's the 5 forces or the SWOT analysis or fundamental analysis or their financial statements or the charting stuff. Use what works best for you and apply that to your trading.